and this kind of remarkable collapse in property market activity that's happened over the course of the last 4 years or so is basically enough. So property starts again down 80% from the peak. Like it just becomes very unlikely that they continue to fall as quickly as they have done in the past because most of the correction has now been done. And so I think from a simple sort of point of view, that it makes a lot of sense that we're very much certainly closer to the end of the correction in property construction than we are to the beginning. Now, I think you can argue about prices and whether prices need to fall further and so on. And I think that is an important question, but it's a different question. But in terms of construction, which has had the fall in construction had a big impact on PPI inflation and a big impact on activity in the economy, like I think it starts to become reasonable to think that most of the correction is now done, and therefore the rate of contraction that happens from here is going to be smaller than it has been in the past. So that's the second thing. The third thing, again, is this idea about money velocity. And so thinking about the time demand deposit ratio in the household sector. So again, that fell for many years. Over the course of the last few months or so, there has been some stabilization. And to my mind, this stabilization means, like intuitively, I think it suggests that households are becoming less bearish about the future. It's not to say they're becoming a bit like the consumer confidence number, right? Like it's not they're becoming much more confident, but there is a second derivative improvement. They're becoming less bearish about things going forward than they were previously. Now, in a bit earlier in the video, I talked about, showed the chart of time to deposit ratios. The other way you could show the chart is this, which is looking at the change in the time to deposit household ratio against inflation. And this, I think, is this intuitive point that usually when households start to move less money into time deposits, you tend to see inflation in the economy beginning to rebound. And here I use inflation on sort of a broad basis, right? So it's PPI, CPI, house prices, and what's happening with the equity market. And so again, when you think, certainly what's happening in Iran and the impact of energy prices on China's economy is something that's pushing up inflation. Like actually, I think there's other reasons why inflation has begun to stabilize in China beyond what's happening with Iran. And it's a bit more fundamental to the stabilization of the economy that started to happen.